You often hear stories about companies making big moves, but how often does a company manage to basically double in size almost overnight? Well, today we're digging into a company that did just that. We're talking about West African Resources, or WAF, a gold miner that just made a massive future-defining bet. And it looks like it's paying off big time.
It really is the million-dollar question, isn't it? And it sounds like something out of a business textbook. But for WAF, this just became their reality. But here's the thing, it wasn't luck. This was the result of a calculated long-term plan finally clicking into place. So let's unpack how they pulled it off.
At the heart of this transformation is just incredible ambition and, frankly, flawless execution. This whole story really hinges on one single, absolutely monumental project. This wasn't just about finding a bit more gold. No, this was about completely changing the entire scale of their operations.
Right, so you hear the company's executive chairman, Richard Hyde, call it a major milestone. And you know what? Even that feels like a bit of an understatement. When you're talking about hitting a target of over 420,000 ounces a year, you're not just getting bigger, you're jumping into a whole different league of gold producers.
And here it is, the moment that changes everything. Pouring the first gold at their new Kiaka mine is huge news on its own. But the real story, the part that should make everyone sit up and pay attention, is in those details. Ahead of schedule and under budget. I mean, in an industry that's famous for delays and cost blowouts, pulling that off, it signals an absolutely elite level of discipline. This one achievement is the key that unlocks their entire future.
So what does it actually mean for a company to add a second major mine to its portfolio? Well, it's the difference between being a successful specialist who's maybe a little bit vulnerable and becoming a diversified, much more resilient powerhouse. See, up until now, WAF's whole identity was tied to one fantastic asset, the Sanbrado mine. It made them a very successful company for sure, but it also made them dependent. By bringing Kiaka into the fold, they've massively de-risked their business and almost instantly graduated to become a mid-tier gold producer. The change in scale is just staggering. Let's put some numbers on it.
Okay, so let's set our baseline. In 2024, running just the Sanbrado mine, WAF produced a little over 206,000 ounces of gold. That's a really solid number, the kind of foundation that builds a profitable company. Now, remember that figure, 206,000.
Now watch this. With Kiaka switching on, the new annual target is over 420,000 ounces. That isn't just growth, that's literally doubling the entire business. It's the kind of jump that takes most companies a decade to pull off, if they ever do. Which, of course, brings up a very important question.
Right. A project as enormous as Kiaka needs an incredible amount of capital. We are talking hundreds and hundreds of millions of dollars. That money had to come from somewhere, right? Well, it turns out the seed for this massive new project was actually planted by WAF's very first success.
And here's the answer. It all came from their existing Sanbrado mine. You see, Sanbrado wasn't just a profitable operation, it was a fire hose of cash, a financial engine that the company masterfully redirected to fuel its own incredible expansion.
Now, before we look at Sanbrado's numbers, we gotta quickly understand a key industry term, all-in sustaining cost, or AISC. The simplest way to think about it is this. It's your total break-even price. If the market price of gold is higher than your AISC, you're making money on every single ounce you pull out of the ground. The lower that number, the more cash you're generating.
And would you just look at how profitable Sanbrado was? In late 2024, with gold prices flying high, WAF was selling each ounce for almost $2,700. Their all-in cost for that ounce was just over $1,200. Do the math. That's a profit margin of nearly $1,500 per ounce. That is the kind of cash flow that builds empire.
So with that profit engine just roaring, WAF had all the fuel it needed to make this huge bet on its own future. And they took that cash and deployed it with an incredible, singular focus.
The sheer scale of their ambition is laid out right here. In 2024 alone, the company's operations generated a massive 252 million Australian dollars. But look what they did with it. They invested more than double that amount, over $500 million, into building Kiaka in that single year. I mean, That is a definition of putting your money where your mouth is and reinvesting for growth on a massive scale.
But here's the thing. Bringing Kiyaka online wasn't the finish line. It was actually the starting gun for the next phase. This huge investment wasn't just for a short-term bump in production. No, it was designed to lock in a new, much higher level of performance for a decade or more. The real goal here was to establish a whole new plateau of production. After they get Kiyaka fully ramped up in 2025, the company is forecasting a sustained output of nearly 500,000 ounces a year, every single year, all the way through 2031. This creates incredible predictability and establishes them as a reliable, major producer for the long haul.
And they're not even stopping there. They are already laying the groundwork for the next chapter. The growth pipeline is still humming along with another project called the Toga deposit. And here's the really smart part. It's just a short trucking distance from their existing Sanbrado plant. That means they don't have to build a whole new expensive facility. They can just dig the ore at Toga and drive it over. It's a hugely efficient model that proves the growth story is far from over.
So, the strategy has been nothing short of brilliant. WAF has masterfully used the profits from one success to build an even bigger one, transforming itself from a single-asset company into a diversified gold giant. The plan is out there, the mines are built, you could say the hard part is done. But now comes the even harder part, execution. The question is no longer can they build it, it's can they run this new empire at the elite level they've promised for the next 10 years. That's the story we'll all be watching now.